Welcome to a special edition of The Impact Equation. We're delighted to be working with our friends at 100x Impact Accelerator on this new series, Scaling Tomorrow's Social Unicorns. Join us as we dive into a 4-part series featuring 6 trailblazing social entrepreneurs who are transforming their communities around the world. 100x is based at the London School of Economics, and applications are open for the next cohort this September. Find out more at 100ximpact.org.
Batya Blankers is the founder and CEO of Chancen International, an organisation revolutionising education financing in Africa. With a deep belief that skills development can transform lives, Batya is tackling one of the continent's biggest barriers, the cost of higher education. Chancen provides student loans to underserved young people across Africa so they can access tuition without upfront payments and only pay the money back once they secure a job, linked to a fixed percentage of their income.
Batya's career spans both non-profit and for-profit sectors, including in tech firms across South Africa and Germany. Holding an MBA from African Leadership University in Kigali, Rwanda, she launched Chancen to ensure more Africans can access the education they need to drive economic growth and shape a more equitable future. Batya, welcome.
Thank you. Good to be here.
So Batya, it'd be great to understand a bit more about your personal backstory that led you to a career focused on impact.
Yeah, I mean, it goes back to Johannesburg, which is where I'm from. And I very vividly remember finishing high school and trying to figure out how I was going to cover the cost of my education. You see, in most African countries, there's very limited government funding available for people to go to university or even to a technical vocational college. I didn't qualify for that. So my only other option was to apply for a bank loan, which also wasn't an option for me because I come from a single parent household. And the interest payments on student bank loans are extremely high in South Africa. I was nevertheless very lucky. I worked as a teacher's assistant. I was an office manager in a tech startup. So I got a couple of interesting jobs as an unqualified person, but kept sort of hitting a glass ceiling. So when I was 27, I wanted to really do a degree so that I could expand in my career and increase my income. And I went to Germany to this private university that offered me an income share agreement, which is where the story or the Chancen story really starts.
And in terms of that income share agreement, how did it work in practice? It's something that is less common in the United Kingdom and also in the United States, where a number of our listeners come from.
Yeah. So I'll explain it to you from my own personal experience, because really, when you're that age and you're entering your first financial contract, you don't understand that much. But what I understood at the time was that I didn't need to put collateral on the table. I didn't need to bother my mum for interest payments or ask her to securitize or put an asset down. So basically, I was able to access this student financing option without involving or burdening anyone else in my family. And then I didn't need to pay interest whilst I was studying, which really mattered to me because I was working and studying at the same time, so limited income. Then the way that it worked is that I would only need to stop making repayments once I had graduated and once I was earning above a minimum income threshold, which was like the minimum wage in Germany. And I thought that was magic because basically what I was being told was, we believe so much in our quality of education that we're going to wait until you get a great job before you repay us. And then when the repayments kicked in, I was paying back a portion of my salary, so a set percentage, not a set amount, which is very different to what a lot of student loans look like. And so as a social entrepreneur, that was also amazing because I didn't have a very high income in the early years, or still don't, but my repayments are flexible because it's a set percentage of my net income instead of being overburdened with this fixed amount that you have to pay every month. So that's what it looks like, from my own experience. Generally, ISAs or income share agreements have 4 key features. So the first is that you only ask someone to repay once they earn above minimum threshold, so that there's basically no downside risk. If you never get a job or if you never earn above that amount, you don't repay. Then the next 2 features go hand in hand, and that is the percentage of your net income that you pay for a set period of time. And once you've repaid that percentage for that set period of time, your obligations are over. So what happens is high earners pay back a little bit more and low earners pay back less. And it's a solidarity model, right? Those that do better give back more, and those that don't do as well give back less. And then the 4th feature, which is super important, and this is probably relevant for your US listeners, is to cap income share agreements. So to make sure that the high earners stop paying at a certain market rate, and you're not asking them to or pay too much back to cover the losses.
So take us into the sort of time in your life, when you were thinking about translating your personal experience into a social entrepreneur opportunity. Where were you? What happened?
It really happened by accident, to be honest. So the organization that financed me started scaling across Germany, and they needed someone to translate their content into English because they had a couple of international universities. So I did that. And the more time I spent with this product, the more I realized how this could be enormously impactful for my peers on the continent and really create access for people who don't have access to any financial products. And so I kind of just, I started talking about taking it to Africa, but I said that I wanted to do a feasibility study first and really solve the problem from the bottom up. And I managed to convince the company to give me a little bit of money to do a feasibility study in Rwanda and South Africa, where we spend time talking to young people, understanding what their barriers were to education. We spend time understanding how the private sector is missing the skills that they need in the labor market and understanding the regulatory environment. And then really one thing led to the next. We met a couple of really great universities in Rwanda who were desperate for a solution. They were providing high quality education, having really great outcomes for very poor young people actually moving into jobs where they're earning 3 times, 4 times the national median income. But they couldn't increase access to their institutions because people couldn't afford the fees. And so it was really through kind of a joint venture type approach where these education institutions were, said, please come and start this. And we will raise the money together and we will pilot this together. And then it just sort of happened, really. So it was demand-led, I would say.
Could you share with us, Batya, a bit about the barriers that a person growing up in Africa will face when considering going into higher education? Can you give us a sense of, I guess, you mentioned the university being the demand side. What about the supply side, so to speak?
Yeah. So a young person that we would typically work with comes from a subsistence farming household, right? So they are typically the first in their family to even finish secondary school. And what usually happens is that they would finish secondary school, maybe get the government loan if they're lucky. So government loans cover maybe 10% of the demand. Or they might save a little bit of money, start education, and then drop out. But most of them actually return back to their subsistence farming households, and you don't actually see a household income increase, right? So there's sort of the cycle of poverty that just continues. So with an income share agreement, they now have the option to access an education institution without having to pay interest upfront and that collateral. So it makes it incredibly inclusive from that perspective.
And how many students have you worked with so far then through Chancen, and what's the sort of vision for scale?
So to date, we've worked with about 5,500 young people across Rwanda, Kenya, and South Africa. I would say that's probably about 30% of the demand. I think our biggest barrier to reaching more students has been raising the funds for this. It's seen as quite risky, very, very innovative. But within the next year, we will double our numbers thanks to a big round of funding that we've just closed.
Could you share with us a bit about the economic model?
Yeah.
Because obviously people might say, is this a philanthropic endeavor? Is it a for-profit endeavor? Who is the guarantor? Does the government act to support it in any way? Can you share with us the dynamic and the economic model that underpins Chancen?
Yeah.
That would be really helpful.
So in terms of government or private sector, so what we decided pretty early on is that we were going to develop a private sector solution. Even if governments spent more money in education, there's a $40 billion gap a year on the continent just for this level of education financing. The governments in Africa do not have the fiscal budget to be able to cover that, right? And so we need a private sector solution to financing education. And so we very early on chose that this was the pathway we were going to use to scale. At sort of the North Star to all of this is to prove a new asset to class, to prove that you can invest in young people, that they will repay you. And if you align good quality education to jobs, you can have really, really good outcomes. We are essentially a research and development organization at this stage, which comes back to the funding model. So as an operating organization, we're subsidized because we are building market systems. We spend time with policymakers. We spend time with departments of education, with schools to strengthen their systems and make sure that they're providing high quality education. At the same time, we're servicing these income share agreement contracts. And we don't want to burden students with all of these sort of market system development costs, which is why we're not for profit. At the income share agreement level, so the money that finances young people, that is set up in a very sustainable, profitable structure. It is impact, so the profit on it is not at commercial rates at all. But we kind of use blended finance mechanisms to structure investment into ISAs. So you bring in, your more patient philanthropic capital as shareholders. And then you can bring in development banks as note holders or sort of family offices that, have to be a little bit more careful with their capital preservation. So we have, just to summarize, we have these two buckets, right? The market systems development side of the business, which is grant funded, but ISAs in themselves are profitable and they are structured with impact capital.
So what are you trying to prove on the market system side? Is it just that the model works? What's the bar you're trying to reach in terms of evidence and the story you're trying to tell?
I think a good comparison is if we look back to the development of microfinance, right? In the early days when Grameen Bank was starting to do its first loans to women, a lot of that was philanthropically funded. And, as the model grew and as this asset class was being recognized, there were numerous activities that needed to happen in the marketplace to make it work, i.e. standards, making sure that you have policy in place around consumer protection, pricing of these kind of products. So what we're trying to prove is a new asset class, and then the market systems needed around that asset class. So very concretely, it's like making sure that at central bank level or at credit regulatory level, there are guidelines on how you lend to young people, and making sure that the outcomes of education are tied to jobs. This is a major shift that needs to happen in the market, right? To date, most education institutions focus on throughput and don't actually think about what happens on the other end and whether people are getting jobs, whether the education is aligned to market needs, etc. And then the final aspect that we need to do is financial literacy, because you're working with people who come from very, very poor backgrounds and have never been exposed to financial products before. And so there's quite a lift that needs to happen there in terms of financial literacy training and job readiness.
So Batya, taking a step back and looking at the continent, what's your sense of the opportunity and the need? Could you sort of zoom out for us and give us sort of the big picture?
So I think the really big number here is this $40 billion a year needed to be invested in higher education financing. So this is anything post-secondary, right? That's the dollar amount. That impacts millions and millions of young people every year. If we compare it to the global north, only 9% of young people are accessing post-secondary education on the continent, right? In comparison to 38% in the global north. So we have a really, really long way to go to catch up. I think the opportunity here is that we have this growing youth population, which is the future workforce for the globe. And we're seeing so many innovative education providers and companies that are thinking on how to engage this future workforce and how you make sure they have the skills we need to support the global north.
When someone makes a loan like that, obviously there has to be often collateral that sits behind that loan. What's the collateral that I guess those higher risk investors are relying upon?
So we've developed a unique algorithm that helps us to basically project someone's future potential income. And it relies on three sources of data. The first is macroeconomic data and the economic environment within which they will work. The second is if you zoom into their very specific sector and course that they're doing. So this is data that we collect on sort of historical alumni and how they are working. And then the third is our behavioral data. So it's a data-driven de-risking mechanism. And I think what we're essentially doing is creating a new kind of credit scoring for young people who don't have a credit history previously. And instead of focusing it on your current financial situation, which is what most credit products do, right? Like how much land do you have? Have you taken credit in the past? What's your income, etc. We're saying that if you take this particular set of data around education or specialization, and you link it to the right private sector, we can project what your income will look like over time. And it's actually starting to work. So we've been doing this for 7 years. And if we look at our repayments, we're collecting about 110% based on what we had projected, which tells us that we were probably a little bit conservative, right? But I think that's the magic and kind of what we're trying to build here is that bringing that data together.
It sounds very similar. So we recently had on the podcast Ian Shapiro from Real. He runs an NGO that enables access to finance for people building affordable green housing in emerging markets. And what he's built is a similar tool, which is an AI tool, which does a credit score for people looking to get mortgages who aren't in the sort of formal economy. And it sounds quite similar, like, using the application of big data tools and AI in this really impact-oriented way. This is the future. So I'd love to hear a bit more about the design journey of that tool, it seems really at the heart of what you're trying to build. Like, how did you come up with it? Like, if it's been going for 7 years, like, you're really ahead of the game when it comes to some of the analytical framework. And then what's the vision for it? Like, as we're seeing LLMs or whatever sort of proliferate, like, how can you take this model and use that to enable your scale?
Yeah, it's actually been so interesting because a lot of it has happened, again, a little bit by accident, right? So we were lucky to borrow like the initial framework from the organization that financed me. It's not rocket science. It's a Monte Carlo simulation, and I'm okay to share that publicly. I think the magic is in how you collect the data and then how you verify the quality of the data that goes into it initially. So that's what got us through the first couple of years and helped us to do this initial financing. The next step, and this is where LLMs or agents become important, is using this new data that we're collecting and understanding the impact of that data on profiling someone's behavior around payment. And so I would say we're now in 2.0 of that algorithm, and quite in quite a discovery phase. So we've set up good infrastructure to collect all this information, and we've actually just started building out a top level like tech team to think through this. I think the real opportunity here is to just create a whole new risk profile of young people. And then we're not just financing education anymore, right? You're financing micro businesses, you're financing a whole host of things. And we need that for the continent. We've got the biggest youth population in the world here. And we need to think about how we're going to create access to finance for this big group. And so I think the vision for me or for Chancen overall is really to make that tool available well beyond Chancen. We don't want to be the biggest provider, right? We just want to be the best in class and enable other financial institutions to access this untapped market.
It's so interesting, Batya, because the conversation takes me back to listening to SoFi, which is a US-based venture capital-backed finance organization that began by providing loans or funding to people that went to sort of Ivy League universities. And their insight was, well, they're the most likely people to pay back those loans. So they're the people that we'll start with. And obviously starting off with a student loan then follows into mortgages and other types of insurance products as those individuals get older. Obviously, the context is totally different. I'm really interested in the impact that the model has had on individuals, families, and communities. Do you have any stories or illustrations of what this has meant on the ground to people, if we can sort of, individualize things beyond the billions of dollars that we're talking about?
Yeah. It's interesting that you brought that example of Ivy League universities and sort of that leading to great outcomes, because I think what we're trying to show, and I'll give you the story related to this, is that it doesn't even need to be Ivy League education. You just need to significantly increase someone's income such that they are motivated to give back. And so one of my favorite stories is Alette. And I met her when I was doing the feasibility study. She'd actually just dropped out. So she was the first in her family to graduate from secondary school. She managed to save money and get into a college, but she dropped out after a couple of months because she ran out of money. And her parents had a particularly bad yield as well. So we met her on her farm, on her smallholding farm, and understood what her journey looked like. And then when we launched, she came back to school. She graduated with a business diploma, right? So not a degree. And she entered the workforce. Her first job was as a receptionist at a school. And her starting income was probably about 2.5 times the country median income. She immediately started making repayments. She actually lost her job, though, during COVID, and took a pause. And then she found a job after that, where she was earning even more than that. And then she repaid pretty quickly. And there's another example of Albertine, who's also, she was the first in her family, first female woman in her family to graduate from secondary school. And now she's the first to have a formal job. And she's also almost completed her repayments to us. And whenever I speak to our members, they are so motivated to make these repayments because of this incremental increase that has happened. So it's not necessarily, right, it's not like 10 times income increase that you might see if you went to an Ivy League university. But really, if it's like 3-4 times to what your peers are earning, you immediately have a different mindset from my sense in terms of your willingness to give back, essentially, because that's what a lot of our members also talk about. It's amazing. They always talk about solidarity. And just another quick anecdote, when I met a group of repayers last year that had completed their contracts, we were having dinner and they said to me, so Batya, when can we start investing in this, right? And I was like, oh, wow, like, you're in your mid-20s and you're thinking about how you want to invest in this asset class. It was pretty cool.
Amazing. How do you find these people in the first place? What's the sort of marketing strategy for engaging people that wouldn't know about this as an opportunity?
So it's been very targeted in these early years just because the demand is so high for what we do. So it's through the education partners that we have vetted, right? Our whole our business model starts with identifying the right education providers. And we have an agreement with them, and we've done a very stringent due diligence on them. We understand that they're going to be around for a long time. We know they have good governance structures. We know they're safe. We've proven that they have high quality. And so they will usually market through their channels and then send the students onto us to apply. We haven't done mass marketing to date because we wouldn't be able to cope with the demand from students.
How do those partners choose the students to engage? Like, do they target within their own cohorts?
Yeah, that's actually a really great question. So we actually set this criteria. That's part of the partnership agreement. Because we are an impact-first organization, we have a target for gender. It's always 60%, which is also an interesting journey, right? Because if you have a science like biotech, we really had to work with this partner to think very carefully, like, how do you attract young women into this program? And then we have targets around people from rural areas and household income. We do a means test. So by the time they come to us, we then check whether this young person really needs the financing to make sure that we're giving it to the right households. And our partner education institutions are very well embedded in their communities. So they often work together with churches or community leaders and make sure that people know about this chance and opportunity when they apply.
I'm very interested, Batya, in, I guess, how you built Chancen, because to go from a standing start with your experience in Germany to growing something across Africa is certainly no mean feat. And we have a lot of sort of aspiring, if not current social entrepreneurs listening to the podcast. So what was the best advice that you were given when starting Chancen? And what would you impart on people that are either embarking or in the throes of building their own social businesses?
I would say the standout advice that I got was from one of our lecturers at ALU. He said, you have to be obsessed with the problem. Like, don't fall in love with your solution. And it's really my daily motto. Like, what problem? Are we solving the problem? And are we solving it well? Which means that we were always, as an organization, we call ourselves a learning organization, and we are constantly iterating. I would say, however, most importantly was really spending time in Rwanda and South Africa before we launched and understanding our potential customers well. And then hiring a team that looked and sounded and had the similar experiences to our customers. 97% of our team are in country. Almost everyone at Chancen has experienced some sort of barrier to education or education financing. And the team was pretty young. It was quite great. I had a very junior team in the early years, but it actually helped in the sense that we could create a new culture. We could create a new mindset. I was considering hiring from the microfinance sector, but I decided against it because I felt like we really needed a fresh pair of eyes in this space and to think about customer service in a new way. And so building that with the team locally and listening to them and iterating was critical in the early years. And then I think later on, consistently bringing in people that are smarter than me is just so important, right?
Yeah, always the best way.
Yeah.
So when you did that starting point, when you spent time in the field, like in Rwanda and South Africa, what were you doing? And what did you learn? Like, who did you speak to? What happened then?
So I think in another life, I would probably be a researcher because I love research methodology. So it was very structured, right? We had these 3 areas of research that we were doing. So we wanted to understand young people and their pathway into education and then into employment. We wanted to understand what was happening in the private sector because that's critical for the solution. So where are the jobs? How are people hiring? What do they care? What does the private sector care about? And then finally, what's happening from a regulatory financial systems perspective? We used qualitative research methods like the grounded up theory. We had research questionnaires. We had focus groups, one-on-one interviews. And then we also used some quantitative research methods and did surveys amongst high school students, graduates, as well as young people who were out of school. And then brought all the data together and tried to understand what could a business, what was the actual problem? And really the problem is a skills mismatch. That's what it comes down to. We say the learning to earning pathway in Africa is broken, right? we don't know how, as a young person, to effectively move into a place or access a learning opportunity that will lead to real earning. And so understanding that ecosystem then and bringing it together helped us to design our operations.
So tell us a bit more about that then, so we haven't quite talked about that. So why is it broken? Like, what's happened? I wouldn't say that that's the case in the UK, right? It's a pathway. You go to university and, you'll get you to you'll go to graduate. That's what sort of the theory is, at least. What's happened in Africa that's broken that down?
I think this is a little bit general because it is quite unique in each country, but I would say for the 3 countries that we work in right now, this is pretty similar. And that's that the private sector and the education sector exist in silos. And so there has, for good reasons, been a really big push to make sure more children get into school and complete school. And then the push has been to get people into university or into training, right? But it's always been on the sort of the input side. No one has thought about what happens on the other end. And so that meant that education institutions were not connected to the private sector. And then on the other side, the private sector, most countries are growing at a steady pace across the continent. It's pretty exciting. But the private sector has actually relied for many, many years on, and this is, due to colonial history, relied on offshoring or bringing talent from outside the continent into the continent. And then top talent migrating off the continent. So that dynamic has also made it difficult for the private sector to understand, how important it is to engage locally with talent. This is like the tip of the iceberg, to be honest. It is a pretty complex problem. And I do think that's where the market systems building is critical. So whilst we're a private sector solution, our engagement with government and the ministries of education is always around sort of moving towards the shift of what kind of outcomes are you measuring, right? How are you setting the targets for your universities? It's not about bums on seats or how many people you enroll at the beginning of the year. Like, let's look on the other end, right? How are you designing your programs based on what is needed?
Because most universities now have a metric for ongoing employment, right? And so is that not tracked?
In the global north, it is more standard. It's not in the global south. It's still early days around that. And there aren't big rating systems that people look towards.
Like league tables and stuff like that.
Yeah, that doesn't really exist.
Even like simple things like careers fairs, is that something that happens to people that, you bring the employees in?
Yes. So education institutions do hold career fairs. And this is what we see with the ones that we support, right? They're really good at that. They design their curriculum in partnership with industry. They have career fairs, and they become a pipeline of top talent for the local private sector. In the last 7 years that we've been working in Rwanda, like the conversations when we have sector working groups in the education space have shifted, right? There's a mandate now. You have to speak to the Ministry of Labour, find out where the jobs are. So that shift is starting to happen, just to give everybody in this space a little bit of credit, right?
And so have you seen that shift in terms of the program design, the education program design? Are they starting to be more sort of vocational, oriented around the future direction of the market economy in different countries? How is that playing out?
Yeah, definitely. And that issue starts with employers, because this idea, a lot of employers are like, you have to have a degree to, come and do admin in my office. Like, that is also starting to shift. Like, it's okay for you to have done a 2-year diploma, or, a boot camp is just as valuable as a 4-year data science degree. So that shift has to start on the private sector side and is starting to change, which is great. And then what I have seen in our work, which has been super interesting, is in our due diligence process, if you don't meet certain criteria, we will pause the process and give you feedback and tell you can come back to us later, or, we just can't work with you at this stage. And very often that's related to data. It's related to pricing. So education institutions really understanding what is the actual cost of education? What should you be charging young people? How does that relate to their future potential income? So the market price of that. And so we've seen institutions that we have rejected come back to us 6 months later, and they've made improvements. It's amazing. It's like this unintended impact, right? Where they've come back and they're like, we now have a careers department and we have this new data. Do you want to talk to us? And so hopefully there's more of this.
That sounds amazing. There's sort of the different sort of beneficiaries of what you're doing. There's so many different groups, right? There's the individual students themselves. There's the universities that you just described who are changing their approach on the basis of the sort of system change that you're enabling. There's the governments, and you're sort of helping to sort of advance commitment to higher education and normalize outcomes in terms of employability. And there's another group that I presume are benefiting as well, which is the sort of investors. Can you talk us a little bit through about relationship with them and like how that works and like what they're getting out of it, and then how this might become outside of Chancen like its own asset class and grow that way?
So we set up our first SPV that we'd set up to grow for our growth phase, the Future of Work Fund, and we've closed just about 28 million in that fund. We actually managed to attract investors that had never invested in education, and at least 3 or 4 investors that had never invested in Africa, which was one of sort of our targets, but also a really great signal that if you structure, education's outcome-linked investments, it can attract new capital into the market. And for a couple of investors, it was actually their gateway into Africa. So they've actually gone on to do follow-on investments into other education companies or organizations because they've learned through us what the market looks like. And so not only are we giving them a financial return, but I think we're giving them market insights that they wouldn't have had otherwise. And then there's obviously the data and the learning around this particular youth segment. In terms of financial returns, we're looking at I would say a relatively okay return. So it's 5% to the dollar on a note if you invest in an ISA. So it's definitely on the impact side, but it's pretty de-risked. It's de-risked by 60% through the blended capital stack that we have. So it definitely is yielding a financial return too.
And Batya, can I ask, because obviously you could invest, one could invest in an individual loan for an individual, but equally someone could invest in a basket of loans to a group of people. And also one could invest in the overarching fund. I might have missed this, but could you walk us through the options for different investors for them if they're philanthropic all the way through to, I guess, for-profit investors?
Yeah, that's a great question. So actually, we're making the case that you should invest in a basket because that is essentially what happens with an ISA, right? You have a cohort of students. They all have the same repayment conditions. And upfront, probably about, of 100, probably about 10 of them may drop out, may not complete, and may not get into employment. So you know that upfront. But you've already diversified your risk by creating this cohort of students. And so then what we do at a special purpose vehicle level is we create 100 or 200 cohorts. And we make sure that we have different study courses in different sectors. So you're diversifying your risk there too. Not only are you investing in hospitality, but you're doing hospitality, coding, and biotech. So if you want to invest with Chancen, it's through a special purpose vehicle that we have, that we've set up, the Future of Work Fund. And there we have 2 layers of capital. We have a preference share class, that really is for your very patient philanthropic or impact first investors. And then we have a note tranche, and this is the one I was referring to earlier, where you're getting a 5% interest payment annually. There's a short grace period, and then we start paying back the principal to you. The ideal, it's like the North Star here is bonds actually, and that's how the scaled across Germany, right? Where you had banks putting together a retail bond that they were then selling to their clients, and we're starting to explore that. So that's our next phase of fundraising, especially looking at sort of the global dynamics of development aid and development banks. We feel very strongly that it's time to unlock local capital, and so we're starting to have conversations with banks here to say how can we structure. Probably in the early days, a social impact bond first, so it'll need some guarantee, but something that they can sell to their clients or invest in directly.
So fascinating. And I guess part of the challenge here is that on the flip side, you need the overall economies to be growing and performing in order for there to be jobs that will then pay people salaries. So again, obviously you need the throughput of high quality courses, a throughput of high quality students, and then an economy that's growing, that's able to provide work. Unless I've missed a trick, is that, I guess, that's the essential dynamic here?
It really is. And I mean, to be upfront, I think the one that people worry the most about is the number of jobs available and is the economy growing fast enough?
Yeah.
Because if you look at it from a macro perspective, you look at Kenya and you see a whole bunch of unemployed university graduates, but they're unemployed because they don't have degrees that are needed in the private sector because there's that mismatch.
Yeah.
And so we need to create entrepreneurs and we need to support entrepreneurs to create more jobs on the continent. But at the same time, we need to make sure that industry really has the skills they need. So really look at it sort of in a very niche, laser-focused way.
Can I ask, so Patrick, just coming towards the end of our conversation, I've thoroughly enjoyed, just taking a step back and looking at the scale of opportunity, what would it take for Chancen to go from 5,500 individuals to 50,000 individuals, to go from a $28 million fund to a $250 million fund? What are the big kind of levers that you can see over the next 3 to 5 years?
So to get to 50 million, we need 150 million in an investment for ISAs. So it's really unlocking the capital for the space. And I think that's just really been a function of time. We've now got the track record. We're seeing bigger ticket sizes coming in. And yeah, I think we're on track there. I think in terms of reach and the operational capacity to reach that volume of students, we're in the final stages of rolling out a pretty complex and well-structured core banking system. So a technology platform that will help us to scale faster. So I would say those are the two big levers: is tech and money. Surprise, surprise. And I think we have the data, we have the key metrics now to prove that it's worth investing in. It's the repayment rate. It's showing that people are paying, our algorithm works. And then it's also showing that people are getting into employment, which is at 80%.
Amazing. And I know that our friends at 100x introduced us. I suspect that they're playing an important role in helping you to deliver those things. Tell us a bit about the support you've had from 100x and what they give to you and the team.
Yeah, and it was so well timed to get into that program because we were getting towards the end of sort of a 5-year strategy cycle, and it was quite clear where we had been going, and then all of a sudden we needed to revisit our real scale plan. And so we had an idea, and when we entered into the 100x program, we had a high level strategy, but they really helped us to hone in on that. Like, what is the pathway to scale? What are the key levers? So the things we've just touched on. And then also just really distilling, like, what is the core of what we do, right? So the whole conversation we had earlier around the algorithm, data, the ability to use that beyond Chancen, I wouldn't have been able to talk about that about a year ago before the program. So they really helped me to understand, like, what is the thing that will scale beyond Chancen and make an impact at a systemic level. And how do we plan for that now, right? Which is quite complex. We are a B2C business that is operational on the ground. Now you're starting to talk about tech, different business slightly. So what is that transition process? Who do you need in your ecosystem to support you? And so they've provided all of the structures needed for us to think that through and plan.
Big shout out to our friends at 100x. So Final question from me. I'd love to just understand your personal development journey here, Batya, because I'm not sure what you studied when you were in Germany, but you've had to learn about building a business. You've had to learn about the education system in Africa. You've had to learn about the intricacies of blended finance and, building. You've had to learn about building an algorithmic based, tool. That's a lot of stuff. It's amazing. How have you managed it? How have you managed to go through all those different, parts of the process?
I suppose it's probably why I'm still doing this. It's just because it never stops getting interesting, right? And there's just so many facets to the work that we do, and I'm just inherently very curious. But I also think it's through an incredible team that I have around me. So, I mean, just in terms of the financial sector development stuff, our COO has 25 years of experience in that space. And so, bringing him on board, he mentored me throughout that whole process. Or very strategically working with investors or funders. That's been one of my key things. Is we've always had investors or funders that have had more than a financial value to us. They actually bring strategic expertise into the room, and then I get to learn from them.
And Batya, final question from me. Have you got any requests of our audience, either indirectly or directly? I mean, there might be some people also sitting there thinking, is there any way for me to invest in a note and take a 5% coupon, and whilst doing so, support people in the African continent into work? So help us to understand what we can do.
Wow. Okay. So if you want to invest, we actually have, so in this $40 million fund that we have space for notes. We're looking to raise about 12 million in notes. And there are various ways you can reach out to us directly. You can also reach out to 100x or UBS Optimus Foundation. They help us to channel funds from across the world. And I think most importantly, if anyone knows of an interesting education organization that really cares about youth outcomes on the continent, put them in touch with us. And if there's anyone out there who's working on income share agreements, one of my side projects is I'm building a global alliance around providers that do similar work to us. So as part of the market systems building, right? So that you bring similar type of organizations together. So if any audience members are interested in ISAs or outcomes-based financing for students, then also please reach out. We would love to learn about your work.
Amazing. Well, we're going to do our best to send that message far and wide, Batya. Thank you so much for your time. It's super brilliant and so grateful.
Thank you so much, Batya. It's been fantastic.
Thank you so much. It's been so cool.
So, Rafi, what did you make of that conversation today?
I loved it. What an amazing lady. I think lots of parallels, I think, in my mind with Ian from Riel. I think, like Ian, she wanted to go straight into the meat of the discussion about what she's doing. She's like obviously really passionate and committed to this problem space that she's in. And as she said, she's obsessed with it and she's like figuring out all different parts of it. And also, like Ian, she's pulling on those two levers, as she said, of finance and technology in really innovative ways, which I think are exactly what the kind of people when we're talking to, exactly the kind of organizations that are going to be the scales winners of the future when it comes to sort of impact and making a change at a system level. So another stellar example of a 100x founder. What do you think, Adam?
So for me, I thought what's so impressive is it's gone beyond proof of concept. And Batya has 5,500 students who have taken effectively a loan and are in the process of repaying. And I think she mentioned 110% repayment rate over the most recent cohort, which proves that their ability to understand, identify, the ability of people to pay is getting better and better. And so on that basis, you can see how something like this can scale. I guess the only concern is, of course, the susceptibility of the model, the sensitivity to shocks, be it in the countries in which they're operating. Are there continued jobs that can be created in order for that virtuous circle to be completed in that way? But I got excited in particular because you could see how 5,500 could reach 15,000. And actually the constraint is capital, which is a good position to be in. It's not about necessarily the model and how it works. It's about access to capital. And if you can prove that you can give capital return on capital, particularly as interest rates fall, her type of proposition becomes more and more compelling.
Yeah, and I think that's really interesting insight about, being a bit bullish on the growth of the economy and the way she's operating. And like thinking about some of our other conversations, particularly like, back to Dr. Hugh Montgomery and some of the pessimism around climate and the implications of climate. A lot of the places that Batya's working in are going to be on the front lines of climate catastrophe. What is that going to mean for economies? What's it going to mean for the opportunity to grow? What's it going to mean for young people and their opportunities to find jobs in the medium term? I think is obviously something that she's going to be grappling with. But putting that to the side, it's such a good news story. It's such an amazing way of leveraging, as you said, finance and technology for impact at scale. And it's, another really inspiring young person doing amazing things.
Yeah, 100%.
All right, Adam, until next time on The Impact Equation.
See ya.